Westpac hikes rates. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because we're going to have a look at an article from Yahoo Finance by Lucy Dean looking at Westpac hiking rates. The banks continue to slowly inch up rates one after the other on various loans and products, and this is even without any change to the cash rate. How are people going to cope if they've borrowed way too much for their houses? So before we have a look at this article, let's just jump over to this slide and we can see the cash rate, the current cash rate, not the rate hike prediction. Florian, what are you doing with your YouTube? It's this one here, the current cash rate. And this is set by the Reserve Bank and it's at 0.1%. Now, back in the day, 3% used to be considered an emergency rate, everyone. Look what happened when they tried to raise it again. Nope, it's been going down. So since forever, living memory of most of the people working, interest rates have only been getting lower and lower and lower. Back in these imaginary, long before, in the before time, you could actually earn interest by sitting money in the bank. The money you had in the bank would earn you interest. So if you were saving for a deposit for maybe a house, that money would actually grow by itself. It's this magical thing. Inflation wouldn't be eating it away as much because the interest you'd earn would be higher than inflation. Oh boy, what a magical, happy time. Now, let's have a look here. This is the rate hike predictor. This is from the Australian Security Exchange, the ASX, and they're predicting that, well, on the 8th of June, the prediction is that at the next meeting, there will actually be a decrease of the interest rates to 0.00%, 93%, and no change at 7%. And, well, they've been wrong every single one of these times, or, well, all the previous times, because it just hasn't moved. They're not going to move it. What would a decrease in the cash rate to 0% do? Do you think it'll shift the banks, or do you think it will just destroy consumer confidence? I think the damage to consumer confidence would have a much greater impact than any potential benefit of going that much lower. I think they've pretty much run out of fuel there. The only place they could go is negative, and our current Reserve Bank governor isn't a fan of going to negative, guys. You know, because if you actually go to negative interest rates, it doesn't stimulate the economy, it doesn't stimulate people spending. If anything, people are encouraged to save more to make up for the cost of having the money in the bank. So they're losing money in the bank, so they're saving more. And businesses are just, they're having to pay thousands of dollars in interest because they need to keep a decent chunk of money in the bank. It ruins their cash flow. You need to have a float. So, you know, awesome way we have these central organizations controlling and managing our economy like a finely tuned machine. Yep, absolutely can manage an emergent system. Never failed before in history at all. So let's have a look at this. Westpac hikes 2- and 3-year rates. Westpac has announced interest rate increases for its 2- and 3-year fixed rates, with subsidiaries St. George, Bank of Melbourne, and Bank SA also set to increase rates. This will increase rates by 0.1%, taking Westpac's lowest 2-year rate to 1.89% from 1.79%. Its 3-year rate will increase from 1.98% to 1.88%. Westpac move comes after CommBank also lifted its 3-year rate in May. 3-year fixed rates are on the rise as the banks start to factor in an expected increase to the cost of funding, RateCity.com.au Research Director Sally Tyndall said. The RBA's term funding facility, which has been offering the banks money at just 0.1% fixed for 3 years, is wrapping up in 3 weeks. We expect more banks to hike rates as a result. With CommBank and Westpac now both having hiked their 3-year rates, Tyndall says it's only a matter of time before ANZ and NAB do the same. 9 lenders, including ING and AMP, have also increased their 3-year rates. The 2-year rate hike have come earlier than expected, but they were coming off a near-record low. Westpac would have been squeezing its profit margins to offer those rates, Tyndall added. Even with a 0.1% hike, Westpac and St. George are still offering very competitive rates, particularly for people with decent deposits. The lowest 3-year fixed rate now on Rate City's database is Credit Union SA, which holds a 1.79% interest rate for 2 years fixed. BCU has the lowest rate at 1.78. So there you have it, everyone. Another one of the banks is inching up their fixed rates. Rates are starting to go up. You know, these rates that we have now, the cash rate, which is just insanely low, everyone. This is a bit of a joke, what we've got here on this cash rate. It's only going to go up. Even if they delay it for a few years, are they going to be able to maintain it at this level? You know, we're just a little cork floating in the ocean of global economic tides. So what are the solutions to this? Well, if you're concerned about a rate hike, you know, maybe you've leveraged too much. You've borrowed too much. You're too close to the edge. Pay off your mortgage early, guys. I know it's a pretty simple thing, but even if you think, oh, I can't afford to make that much of a payment, just do micro payments. If you find, you know, save $5, don't have that coffee, don't have that lunch. And then, okay, that's $5 in your account. Put it off the mortgage every day. A little $5 here, $3 here, $2 here. You go and take plastic bottles to the recycling place and get $5. Put it off the mortgage. Just start building up these little micro things, and then you realize, oh, wait a minute. You know, after a couple of months, oh, look at that. There's we're a week ahead on the mortgage. We're 2 weeks ahead on the mortgage. We're 3, oh, look, we're a month ahead on the mortgage. And you can be like, here, the people who are, you know, increase your liquidity buffers just in being ahead on the mortgage and maybe an offset account. As I'm saying, making additional payments. Lock in your interest rates now if you're worried about rates rising. If you're concerned about them rising and not being able to build up a buffer, lock them in. The only problem with locking them in, if you go fixed term for a period, is you can't make as many additional payments. The additional repayments are limited. Depending on your conditions and terms, you need to go through all of that. I know with ours, we've locked it in, I think 1.99 with Combank, and I can only pay an extra 10 grand a year, which is fine because, well, all of my resources need to be going to renovating the house. So I've done that intentionally to force me to renovate the house and not pay off the mortgage first. And say, oh, it'll be right, honey, because Rachel knows what I'm like. And here's another interesting one. Spread out your money to avoid all monies in clauses. Now, if you're in business and say you've got your home loan, all of your bank accounts with one bank, and they don't want to do business with you, they can just say bugger off. The business that you're in is too risky. We don't want to provide you any financial services. They can do that. Or if you're in trouble, they can take all the money you've got in the separate accounts and just mush it all in together to solve your issues. That's the all money's in clause. And another thing to consider is if we have a look here. Notice here in this article how you've got, Westpac, and then under it you've got St. George and Bank of Melbourne and Bank SA. So they're all pretty much the same bank if you're worried about the $250,000 bank guarantee, you know, that's the guaranteed deposit. Those are all the same banks. So if you've got 250,000 Westpac, St. George, Bank of Melbourne, and Bank SA in each one, and you know they happen to go under, which I don't, you know, bank bail-in. I don't think that's ever going to happen. The government will just print money to the bloody moon before they let that happen, honestly. But you know, if issues happen, you're not going to be safe. You know, you're only going to get 250, not for each account. So spread them out to different banks and different institutions. So there you go, guys. What do you think, and what are your suggestions? Are you worried about these rate hikes? How high do you think it will get? And would you like to actually earn some money on a deposit? As always, thanks for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can sign up for SelfWealth or Stake. You can use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. Buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care. I'll see you next time. Bye for now.